Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, March the 30th. What we're going to talk about this morning, before we move over into the pre-market futures action, we're going to talk about economic data that is coming out this morning. After we speak about the pre-market futures action, we're going to segue over and into our members' stock chart requests. That's where we review the symbols that our members submit for me to review live on video. But first, let's kick things off with our sponsor. Our sponsor being our friends over at TrendSpider. Folks, automate your grunt work. It's 2021. All of your competition out there, whether it be your subreddit groups or your fairly experienced trader, they're going to be automating their grunt work and speeding up their analysis along with improving their accuracy by leveraging TrendSpider software. Take advantage of their backtesting to find winning chart setups and analyze your potential trades and strategies. Time your trades with precision with their alerts. You get a 35% discount code using the discount link below. And you head over to their website. That link will take you over there. Take a tour of their system. Also, TrendSpider University. You're never left alone. Jake, Dan, the team over there, great guys. This is not a place where you subscribe and you're left on your own. They have a great support function. And I recommend them highly. In fact, so much that I offer TrendSpider for free with our silver and gold level memberships. So take advantage of it. 7-day free trial offer. Use that link below. 35% off. Cheapest price on the web. TrendSpider. Okay, let's talk a bit about economic data before we move on over. Hey, Sam. I didn't even take a look at the dollar yet. It hit 93. Wow. You Europeans are killing us. But to be fair, the yen played a hand in that in the back half of the week as well. I'll check out that chart in a moment. Thanks for bringing that to my attention, Sam. For those folks not familiar, Sam is over in Italy. We have a pretty large international group now. John Spencer from New Zealand, etc. Okay, Eric, good morning to you. This morning, we have the Case-Shiller National Price Index, year-over-year change. That's for January. Folks, you can find inflation anywhere, and in particular, housing. You have a Fed head coming out, ignore them. Consumer Price Index, Consumer Confidence Index. Wow, it's so early. Oh, God. I can't read. I can't speak this morning. Consumer Confidence Index, that's an important number. Remember, the consumer is the vast amount of GDP. It should be good. After all, we were told that our GDP is growing, what, well over 4% for Q4 of last year. And that comes out at 10 a.m. Eastern Standard Time. Things to remember for tomorrow, ADP. What does that mean? Forget about ADP. That means that on Friday, we have the Pimp Mac Daddy of them all. That is non-farm payrolls. Watch this number. And, of course, we get initial jobless claims each week. You know, a year ago, 2 years ago, a year and a half ago, this meant nothing. It was always coming out at around 200,000 a week. Now we have to hope that we don't have anything more than 700,000 initial jobless claims. Nightmarish. But the economy is doing great, we're told. All right, let's check out the pre-market futures. All right, so as we went into the week, this is the Russell 2000. We went into the week short of the Russell 2000. We went into the week short of the triple Qs. Now, the Russell was down when I fell asleep last night. It rallied a bit, but it's beginning to break back down again. Now, could we be putting in a higher low here? Maybe. How do we know it's a higher low? When we begin to break out. Until then, we're putting in lower highs and lower lows. So, a big warning flag on the track for the Russell small caps. Now, when you take a look at the other sectors or indexes, the S&P 500, which was up yesterday, is down this morning, not horribly. Let's call it flat, to be fair. I don't want to be hyperbolic. So we're holding support. We may have a double bottom setup, an undercut double bottom here. Here's your left side of your double bottom, pivot point, right side undercut. Meaning, when I say undercut, mean you took out the prior low. However, you bounced back, pretty bullish stuff. So we haven't failed here. We haven't broken down. But where my eyes are this morning in particular is on, besides the small caps, the NASDAQ 100 or your triple Qs. We're down over a half percentage point. I was rather surprised yesterday because remember, these are all mostly tech stocks. Shouldn't say all. And yields rose yesterday in a very big way. Yet, the NASDAQ 100, while down on the day, held its gains. I mean, it didn't fail hard like the Russell 2000 did. But what I worry about here, actually I'm hoping for, to be honest with you, because I'm short, is that we break down. I know a lot of you are out there saying, screw you. This is why I announce my positions, or directional trades anyway. I think this is a dead cat bounce. And as yields press up higher, along with the US dollar, technology comes under more and more pressure. Now, going into the week, on the week ahead commentary with members, I mentioned that the semis looked very, very good. Take a look at the semis. Yesterday, here's the SMH. Inside day, we have a potential higher low, but we have no ability thus far to break out. We had an attempt at a breakout on Friday. No big deal. This is definitely an accumulation day. Look at the volume on Friday. Now we have about another 2 days to go before we need to power through and make new higher highs. Now, what do we need to make that happen? Well, you really need bond yields to pull back. Now, here's the bond yield, how it closed out yesterday. A big gap up, very close to the highs of the week of March 15th. So if you overlay a chart of the semis, of technology, of the triple Qs relative to the 10-year yield of late, they trade inversely of late, not historically. And what the 10-year yield and the price action of the NASDAQ 100 and technology are telling you is that you've reached an inflection point where technology just can't take these higher yields anymore. They were able to take it all the way through this run here. But I warned, as we began to break out above this line in red at around 1.1, we'll round it down, watch stocks. They're going to begin to weaken up. And as we began to go parabolic, that's exactly what happened. Not all stocks, your cyclical stocks did well, meaning your banks, energy. But even the banks and energy did not move up yesterday. The banks, I can understand, you had that bad news out of Nomura, you had the hedge fund blowing up. So maybe that's a multi-day cause to just hit the pause button on the banks until everybody understands who's got counterparty risk. So NASDAQ 100 under pressure here this morning. taking a look at the Dow. Where are my Dows? The Dow's been doing very, very well. Dow's up over 8% for the year. So while I don't always go over it in the morning, so little so I forget where the symbol is. But now the Dow has become relevant. Where is it? I had to write down the symbol until I can remember. Here it is. All right, the Dow is up. So the Dow continues to lead here. It's outperforming the S&P 500 and, of course, the triple Qs. So we're up. We do have resistance above at or around 33.3. All right, to Sam's comment about the dollar. Ugh. Oh, my God. Strong. Very, very strong. Yeah, so this is one of the highest closes. This is the highest close since when? Or highest trade. We haven't closed yet. We haven't been at these levels since November of 19. A lot of resistance at these levels. But there's still room to run up higher here. Now, for those that are mostly stock traders, and you're saying, why is this guy spending so much time worrying about the US dollar? What does that mean? Well, it means that, I want to create an alert here. It means that commodity prices are going to come under pressure, some more so than others. Now, we do have a long position in the gold miners, silver miners. So those names are not going to take warmly to the dollar hitting highs not seen since November 19. So, very interesting stuff here. Sam, you ruined my morning, man. All right, let's create an alert there. Let's get notified if and when we do break out. Back to a 4-hour chart. And there's our resistance level above, alert above as well. Let's take a look at how commodities are behaving in light of this big move up higher in the US dollar. I can't imagine good. If they're trading up, that's a huge tell. But of course not. Gold taking it on the chin. Son of a gun. Barely holding on to 1700. This bar just opened up at 5 a.m. this morning, Eastern Standard Time. So only a few minutes ago. Good morning, Big Bear. So this is a pretty healthy reversal bar here. Let's hope that it holds. It'll close 9 a.m. Let's take a look at some other commodities. Let's check out food prices. Soybeans, weak. Corn, holding in there. Wheat, which has been weak. It remains weak. Silver, of which we are long, but we haven't added to this. I would imagine, yeah, it's down. But I'll tell you, this setup on, one thing I want to point out, and this goes for equities too. You know, you're seeing this on gold, silver, and equities as well. This flirtation with a W formation. Here are the lows on silver back on the 25th. Rally, pulled back, kind of downward sloping price action, hugging this now support level. It was resistance back here. Let's change colors to illustrate. Let's make it orange. Why? I don't know. Looks good. Okay, so this is now support. We broke out here, holding support. If you take a look at gold, and the key is, before I leave this chart, you don't want to see this. If you're bullish on silver, you don't want to see a breakdown below the support level here. And that's a low of 24.43 the ounce. Back to gold really quick. Now, gold no longer has that downward sloping feel to it. We had it, but we broke. Let's take a look at equities. S&Ps, no. The Russell 2000, to a greater extent, it's becoming a bit sloppy now. Here's that lower low on the 25th. If we break this line in the orange here, we're coming down here. And if we break it, expect algorithmic selling. But I will say this, I'm not happy about this, but we are seeing a hookup on RSI. We continue to put in lower highs. Will this turn into a higher low on the small caps? They're all holding this, the lows of the 25th end. Everybody's of the belief that that was the low. I'm not convinced of it. Could be, but I'm not convinced of it. All right. Let's go over a couple of stock market chart requests. Big Bear, I wonder, Bob, you have been in China cracking down on its own companies and Europe locking down. The dollar is the only thing left. The only thing I know about China is the crackdown on Alibaba and them wanting to diversify a couple of their business segments. I haven't been following what's been going on over in China all that much because, frankly, the rise of authoritarianism is worrying me more here in the United States than it is over in China. I always considered it a foregone conclusion that that's what happened over in China, but not so much here. I'm focusing a lot more on the United States, and frankly, it's Orwellian. So, Europe locking down, the dollar is the only real thing left. The lockdowns in Europe are concerning. The fact that we have a vaccine here in the United States, yet they're pounding the table on people continuing to wear masks. I'm probably going to get a flag on this video now because I'm speaking about this. You're no longer allowed to have an opinion on this matter, but I'm going to speak it anyway. To the extent that I have an opinion, I am certainly not a professional. People want an end to this. They want it done. And if you tell people, take this drug and you're going to go back to normal, yet you have the professionals in government telling you still got to wear double masks, what are you talking about? What are you talking about? Where's the light at the end of the tunnel here? So now they're coming out with vaccine passports, all this crazy stuff. I just get the feeling that they're going to come out with a new variant and they're going to be locking down all over again. You had Biden out talking about locking down, requesting that states that have taken off the mandate, the mask mandate, reinstate them. Why? There's no science behind it. You take a look at the numbers out of Texas, they're doing quite well there. And they haven't had a mask restriction since the beginning of March. So there's just something nefarious going on here. So that's my own opinion. Could be wrong. Don't want to be a conspiracy theorist. I'm more worried about the United States than anything else, Big Bear. I just can't take my thoughts away from it. It's just pretty goddamn scary. All right. I think I'm being spammed here. I don't know what shrink is. All right. R-Train, good morning. And look, going back to this U.S. dollar for a moment. Looks like we're going to move up higher here. And this is not good for stocks, at least the big cap exporters. And it's not good for the Europeans either. It makes their goods to ship over here more expensive. So the Germans aren't going to like this. Actually, I just misspoke. I apologize. The Germans do like this. The weaker euro makes their goods more cost effective here. It's still early, folks. First cup of coffee. Where is the euro? Jesus Christ. Euro is just falling out of bed here. And to your point, Big Bear, it's probably on more talk of a lockdown. They just can't let it go. I mean, this Merkel is just an absolute and utter nightmare. Here's the euro on a weekly time frame. We're at lows not seen probably since 2019. Last time we were there, yeah, November of 19. Actually, no, November of 20. November of 20. I stand corrected. This is horrible. One spot, 1.6. You would think that we would already have support here. I mean, this is pretty rock solid support on the euro. And we're through it right now. Maybe it's a retest. Maybe we'll bounce off of here. But, you know, you take a look at this. All through. Yeah, it's Easter season. Let's make this purple. All right, this was really good support. And right now we're flirting with it. So I would have to say you got to expect a bounce here on the euro fairly soon. All right, let's do a couple of chart requests. I got to get moving, get this day started. Okay, chart requests are brought to you by our friends over at TrendSpider again. 35% discount code below, automated technical analysis. And who do we have up here? David C. AUPH. A farmer name. Daily chart looks interesting already. Monthly chart. All right, so folks, here's the value of, and I don't mean this to be an advertisement. This is more of a tutorial. But the value of automated trend lines and technical analysis. So here's what I would normally do. I like to take out my crayon because I'm old school. And we have a break of monthly support. So we have a lower high here on a monthly time frame. We have 2 trading days left to go. So these shares are in trouble on a monthly time frame anyway. So we've broken support. Now bringing up our automated trend lines, click of a button. This tells you where we have support below. So perhaps we'll bounce off of this support level. And I'm putting a question mark there for a reason. All right, so our alert is set. Here it is up here. Now, drilling down to a weekly chart. The first thing I look at on a weekly time frame is this. Do we have a new weekly low? The answer is no. And one positive that I have about these shares is that the number one thing you want to look for with a stock that's under pressure and selling off is ask the question, has it stopped going down? And it appears as though we found a bit of support in here at the $11.96 per share level. We hit it back here the week of March the 1st, rallied off of it, pulled back, did a retest, held, no new breakdown this week. So the weekly chart is setting up fairly nicely. I would love to see a pullback and a retracement to 11.96 or down to where we have our alert set at around 11.68 per share. Buy there, scratch the itch, open up a small position, test the market with a tight stop below. Now, if we begin to break out and we happen to recapture this prior support level, which will now act as resistance, then we could add more. But that's way too early to make that call. Right now, if we're going to get long, we want to do it at support. We want to scratch the itch with a small position. Now, the daily chart, I mentioned this starting out here, looked pretty good. And the automated trend lines picked it off. Take it off. I know it's hard to see because I drew another line here in green earlier. But pretty much right on spot. There's your support level. So that's the value of the automated trend lines. It validates your own analysis. What I'd be looking for here is also a breakout on a daily time frame. We have a wedge here. Ideally, they sell it off and they reverse it to close back above the support level. Then you could step in, scratch the edge, open up that trade. Tight stop right below. Then add more on a breakout above either one or both of these resistance levels. Then once you get up to this pivot point, because remember what you're forming here is potentially, no guarantees, but a potential for a W formation. Here's the left side of your W pivot point or the center of your W, right side forming. If we break out, that's creating the right side of your W formation. You close above the pivot point at 1452. That's game on to the long side because now you have a reversal in trend. So AUPH is at support. The monthly chart concerns me because we have a monthly breakdown, weekly chart, building confidence, daily chart. That's our timing mechanism. You want to see ideally a retest of this lower band support and then a reversal off of it. If it continues lower and we close down below the support level, you want to avoid like the plague because it's going a lot lower. So watch these support levels. Test, 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 nibble, nibble, nibble. Add more on the breakout, tight stop right below. What else do we have for you today? Baidu. All right, so we went over this on Sunday night. We're holding this lower band of support down 32.5% on the month. Here's a weekly chart. We bounced yesterday off of monthly support again. It held. Volume is rolling in pretty heavy on the week. I mean, this is only one trading day. Daily chart. This could be a dead cat bounce. We became oversold relative to the third standard deviation Bollinger Band in red. We popped off of it on the 26th. And now what we want to do is they'll probably move it up higher here. But when I get these, I just like to take my crayon out and draw some resistance levels. And all I do is I wait. Do we break down? If we break down, it becomes a short. If we break out, well, then you look for a good setup to get long. But these shares are under a lot of pressure. And to Big Bear's point, there are activities taking place over in China which are concerning, in particular with Baidu. So I would be very, very careful with entering these shares. The government involvement here is pretty heavy. And no matter what country you're in, no matter what government touches, it pretty much sucks. So be careful here with Baidu. Not my favorite trade. Shopify. This is a victim of the hedge fund blow up last week. And it's probably opportunity, but longer term. Thus far this month, we have an outside reversal month engulfing the opening and the close of last month. And it's pretty bearish stuff. We are at current trading down below key support. And keep in mind, folks, when you're taking a look at certain stocks like Shopify, these have been leaders relative to the cyclicals, meaning banks, energy. They are now laggards. Watch for support at 973.50. RSI is just a total nightmare. We've broken down to new lower lows after putting in lower highs. Weekly chart. Come on. There we go. So thus far this week, weekly chart, we have opened it down and into the bottoming tail, wick, shadow, call it cupcakes for all I care about. When you gap down into the wick or a shadow, and it goes for if you gap up into the wick of a shadow of a preceding candlestick. In this case here, when you gap down into it, it's bearish. When you gap up into it, it's bullish. So this is not a bullish setup for Shopify. We are down currently nearly 1.33% on the week. The rising 50-period moving average acted as very good support last week. Let's see if it holds this week. Daily chart. Yeah, there are problems here. There are problems here. I mean, on Friday, we were able to rally back and close above support. Not one support level, but two support levels. Again, the power of automated trend lines. But this week, we failed to hold it. And this is what you get when you gap down into come on. All right. There we go. When you gap down into the wick of a preceding candlestick. So it's early in the week. Maybe we'll rally back for all I know. But at current, I would not be a buyer of Shopify because the path of least resistance from last week remains to the downside. This is not wonderful. Now with that, folks, everybody have a really profitable trading day. Thanks for joining in. Hit the like button, subscribe, and I will talk to you soon. Be well.